Hello and welcome to our next video, the second video within the CIMA F3 syllabus. Just let me remind you that these videos are all based on the Express notes, which are prepared by the EXP group, and you can download them from EXP website, the expgroup.com. Now we're on page 9 in those express notes within CIMA F3 syllabus. This is financial strategy paper, and this time the second video will be devoted to the dividend policy. We said that the method of paying dividends, or the strategy within that dividend decision, is one of 3 pillars of financial strategy. Now we will answer the question why. Why is it so important how the company pays out dividends? Well, before we start talking about the patterns of paying dividends, let's just recap on some theoretical issues. Now, have in mind that paying a dividend is neutral to wealth of shareholders. The fact is that if you consider the value of the company as a pie, when the company pays out a dividend, it gives a little bit of that pie cash to shareholders. So before the dividend payment, the shareholder owned the whole pie. After the payment, the shareholders owns a slightly smaller pie and a little bit of cash. So theoretically speaking, right after the payment of dividend, the share price of a company should fall, and if nothing else happens, it actually would fall. Now in reality, obviously, every second there's so much new information in the market that these movements cannot be tracked so well, but the theoretical pattern is drawn up here. Dividends are neutral to the wealth of shareholders. Yet, shareholders are not totally indifferent to whether dividends are paid or not. If you look at the dividend policy, you can have two extreme situations. On the one extreme, we do not pay a dividend. In a company like this, the increase in shareholders' wealth is by the growth in the share price. On the other hand, on the other end of the spectrum, you will have we pay divi every year. Now, obviously, this choice is based on something. Usually, it's based on who our shareholders are. In reality, it's also based on the industry that the business is in. But ultimately, the shareholders make their investment choice also based on the industry. So it is unlikely that old age pensioners would invest in modern internet technology company A, because they don't probably really understand the business, and B, because they wouldn't like the dividend payment pattern, probably. Now, people who would invest in companies that do not pay dividends, or institutions that would invest in them, are those that do not need or want cash. Although difficult to believe, there are people and institutions like this. Because every time you get cash, if you have a lot of it already, you must make a reinvestment decision. A reinvestment decision is costly. You have to hire investment advisors, choose new investments. That's costly. So there are institutions and there are people who do not need cash, and therefore they do not really fancy companies that pay dividend every year, because every divvy for them means reinvestment. Now there are also people who want cash, or now they see the payment of dividend as a sign of health of the company. The company is able to pay dividend every year. That means it's a stable, sustainable business that generates cash from year to year and pays it back to shareholders. That's good for some people. Now, within this bit, you may have a number of ways to pay a dividend. You may pay a fixed amount of cents per share every year, or modified version of that, increase it by a certain percentage every year. Or you may always pay a certain percentage of profit. Say we pay 50% of our profit as dividend every year. You may also end up with a situation that's actually somewhere in the middle of the scale, so let the board decide. Here you don't have a clear dividend policy. You actually let the board decide. If the board finds some interesting investments within the company, they would rather keep the money in that company. If they think there is nothing that they can actually do within that business, it's better to pay that money back to the shareholders. Alright, so these are the first considerations you need to make when deciding on the dividend policy. Now, I said just a second ago that the decision whether to pay a dividend or not is also dependent on what investment opportunities there are ahead of the company. So if you have the board and they say, well, there are new markets, new projects, new opportunities to seize in those markets with high returns, where obviously what you mean is that the return is higher than the cost of capital, then the board would usually like to keep cash in the company. They would rather not pay a dividend. They would say to the shareholders, look, we can give cash back to you, but in reality, what would you do with it? You would put it in the bank and get 3% a year. Now leave it with us, because we have got ideas, and within those ideas we will make you richer, basically. On the other hand, the board may decide there are no interesting opportunities either because of the industry that they're in. Let's say they are in a highly regulated industry where they have to do just one type of activity and they already do it and they generate cash from it. They cannot invest it in anything else because they are regulated and they're supposed to stick to the activity that they do. Then obviously there is absolutely no point to keep cash in. So do not keep cash in, because the only thing you could do is put it in the bank. As a company, it doesn't make sense. Quite honestly, the shareholders did not hire the board and pay them huge salary so that they put shareholders' money into the bank. They hired them to make those money work for shareholders, not sit in the bank. So in such a case, that option is out, because what the board should do is give it back to shareholders. If they want, they will put it in the bank, and it's going to be way cheaper if they do it. If they don't want, they can put that money in the shares of another company and make that money work for them. So, these were all the considerations for the dividend policy.